Hello everyone, my name is Moji. You're watching a Bitcoin Bubble news channel. We're in the time frame where liquidity usually rises before the US election. The Treasury and general accounts of the government tend to get drained by Janet Yellen. This is because they just got tax money in. We have a possible solution. This is something I talked about with Ovmando earlier on Rect Vision. If they sell dollars, there is a chance that more dollars will enter the system. Rate cuts, a lot of cash, and all of these other things are on the way. This is the start of the cash cycle. This tends to be very seasonal in crypto until about August or September. Then it gets rough during the election because no one knows where it's going or what it means. Eventually, after the election, the extended banana zone makes it smooth again. There is more excitement now. As buyers wait to see what 2024 holds for the prices of crypto assets during the current bull market. The U.S. Securities and Exchange Commission approved a several spot Bitcoin ETF in January. Since then, big investors like hedge funds, pension funds, and insurance companies have shown a strong desire for these new products. At first, this flood of institutional capital made people think that prices would keep going up during the bull market. Bitcoin did rise sharply from the middle of January to the middle of March. It hit a high point of $1.60 to $6,900 and then reached new highs around $1.77,000 by the middle of March. But since then, market mood has cooled, and even though prices have changed recently, investors and crypto fans are generally less optimistic. Raoul Pal, founder and CEO of Real Vision, is still optimistic about the prices of crypto assets beyond 2024, even though the market is unstable right now. Powell recently talked with Julian Brigden, who is the head of macro studies at Global Macro Investor, about current changes in the macroeconomy and how they might affect the crypto sector. Powell stressed how important the banana zone was. This is a time when prices usually go up a lot during crypto rising markets. He thinks that between now and September, the macro and crypto spring will give way to a stronger summer phase. Powell thinks that crypto prices will rise strongly before the change. There may be a short time of stability between September and November because of the uncertainty in the market about the upcoming elections. But he thinks there will be a strong comeback in the autumn, and he expects big gains for cryptocurrencies and other digital assets in general. It does move it, but that's the same as making $25 billion in a $250 billion space. And I don't think the institutions will change it. But it does show that most people agree that this is a good type of product to invest in, because it brings in more people. I don't think it's the formal flows that are the problem, but more people. The question now is whether this cycle will end with a blow-off top. That is most certainly possible. The only things that matter are how the cycle goes, what liquidity does, and whether or not people lose their minds. The thing that makes a bubble is animal spirits. Most of the time, it's not the business cycle. When there is a boom at the end of a business cycle, it usually breaks away from the cycle. We have no way of knowing. When options start selling on the CBOE, that might change the market a little. We'll have to wait and see what that does, whether it's on the CME or something else. I believe we have been putting things together for 3 months, and the work Julie and I have done points to a higher next step. I think Julie meant that we are in a macro summer situation, which means that growth and inflation are both going up. It's the change in the price of things, it's not. You need to know that the second derivative is one thing. But I don't see how this is possible since the ISM for most countries, including the US, is still less than 50. That means it's still shrinking, but it's getting better. If you look back at the last 6 months, I want to urge you once more. And everyone, as I said, the most recent MIT out about an hour ago. I talk a lot about unemployment and PMIs. I believe that more like 80% of PMIs are up every 6 months, and more than half of them are back in growth territory. It's not true. Take a look at China too. Like Germany and Sweden, China has been above 50 for a while now. That's right, I put a chart in there because Sweden is one of my favorite countries to keep an eye on. I wrote a lot about this in GMI. One big reason for this is that Sweden is a small export-oriented country, which means that when the business cycle starts to get better, it's one of the first places you see it. In the most recent MIT report, the chart that drives me crazy is the one that compares Sweden PMI new orders to inventories to the ISM. This chart should be more leading than the ISM because of the dynamics I just talked about, but it's only gone up. One more thing I want to talk about is the global PMI in May. We're still waiting for all the PMIs for June, but the global PMI sped up to its fastest rate in over a year in May. The cycle is getting better. It's just that macro is like painting sometimes. The process can go very slowly. The US government owes a lot of money. We know that more cowbell, which means more cash, is the only way out until at least 2030. Because of trends, the Fed is just debasing their currencies. This leads to debt growth, which means that public debt growth that is higher than GDP is just turned into money. Who against what? If there was a globalized currency crisis, it would mean that paper currency lost value, which made the prices of assets go up. Are you sure that the euro will have a crisis? I doubt it. In the long run, will it get weaker or stronger? It will move around, yes. Is there going to be a problem with the US dollar? Not possible at all because of the lack of dollars. That's why I don't see a currency problem. Yes, there will be breaks like the ones we're seeing with the dollar-yen when there is a slump. You can see it somewhere else. There aren't enough dollars for that. I don't see that. Actually, anything that has to do with money or liquidity is usually good for stocks. As Julian said, more noise. If the chances of a recession go up for some reason or the Fed lowers interest rates, more money will flow into the system because they're allowed to. In other words, these things are good, not bad. I know that everyone is scared about the word recession. Remember that the last time it happened, it was because of COVID. Before that, there hadn't been a recession since 2008. In some ways, you could say that COVID stopped the slump. So everyone knows COVID, the crash, and how stocks went down. It's not likely right now because we have the power to debase the currency, which drives up the prices of assets. In other words, more cowbell or cash is more likely to come in when the economy is slow. I don't think we will be looking for a slowdown in the next 2 years, 2026. So it was more likely that people would pull their money out of the market and the Nasdaq might have gone down 20%, which I consider to be a sideways market, rather than going down 30% to 40% like it did in 2022 because of this inflation pulse. So it's kind of a break that recharges that could last a year before the next leg up. This makes me think that we might have a full bubble cycle until 2030. We'll just have to wait and see.